With every new month of trading, I realize more and more clearly that the market is constantly changing. Strategies that worked perfectly well in one period may start to yield poor results in another. And perhaps one of the most difficult tasks for a trader is not simply to find an approach that works, but to learn to adapt in good time without undermining one's own system. In the past, any changes in the market would make me want to completely overhaul my trading. If several trades in a row closed at a loss, I would start to think the problem lay with the strategy. Now, I see things differently. Not every difficult period calls for radical action. Sometimes it is enough to reduce activity, review entry conditions, and give the market time to reveal a clearer structure. There was an interesting situation in the oil market recently. After a prolonged sideways movement, the price shot up sharply on news of supply cuts. The momentum looked strong, and many began actively jumping on the rally. But I noticed that after the first few hours of the move, volumes began to decline, and the price itself stopped updating local highs at the same pace. Instead of buying along with the crowd, I decided to wait. After a while, the market began to gradually return to the range. This situation served as another reminder of how important it is not to react to the emotions of the majority. In the foreign exchange market, the USD/CHF pair taught me a similar lesson. After a run of quiet days, economic data was released that caused volatility to spike. I used to see such moments as an opportunity to make a quick profit, but I now realize that rapid price movements do not always translate into a sound trade. I missed the initial impulse and only entered once the market had established a clear direction and confirmed the level. The trade wasn't the largest, but it was very clean in terms of execution. I'm also increasingly noticing how important one's inner state is becoming. There are days when the market presents good opportunities, but my concentration and emotional state prevent me from capitalizing on them effectively. I used to try to trade no matter what. Now I take a different approach. Sometimes the best way to preserve your results is to stop in time and not force yourself to act under pressure. Interestingly, similar principles apply beyond trading. In work, business, or any long-term projects, it is impossible to remain at peak productivity all the time. There are periods of growth and there are phases of recovery and analysis, and the sooner you accept this, the more calmly you will view temporary difficulties. Over time, I began to realize another important thing. Stability isn't built on perfect trades, but on the ability to maintain the same approach regardless of external circumstances. The market may be fast, slow, chaotic, or calm, but my rules must remain clear and consistent. This, I suppose, is what distinguishes a mature approach from the constant search for the perfect moment. Because true confidence doesn't come when everything is going perfectly, but when you know how to stay in control, even in the face of uncertainty.